Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. Welcome to a special early edition of the Token Metrics live stream. I'm your host, Bill Noble. I'm joined by my colleague, Mehdi. Mehdi, welcome to the show.
Thank you, Bill. How is everybody doing today?
All right. Feel free to leave a comment. Also, if you need a roadmap in crypto and you need to make money in crypto, then subscribe to this channel. This show is brought to you by tokenmetrics.com. So if you need some of the best research in the business, please go over there and get yourself a subscription. And of course, if you like today's content, please hit the like button. All right, here's the agenda for today's stream. We wanted to give you some content early on in the day because of what's happening with both crypto and equities over the US holiday weekend. So before I get started, let me just welcome a few people to the stream. We have Wax, crypto student, Taz, of course. Hello. Okay. Omar, Becca, all right, and Chandra. We welcome you to the stream and we appreciate you being with us. Always feel free to let us know where you're from in the comments. All right, let's kick in and start your market update. Here's how we're doing it today. 12 critical crypto charts. All right. So what I want to do today is I want to give you a lot of detail about a fewer number of charts so we can evaluate, like, is the market going to crash today? And if it does, right, where are potential buy points? So let's jump into the stream. Stocks. Goldman Sachs is out this morning with weaker than expected trading revenue. I'm not sure that's a total surprise because Goldman stock has been underperforming the overall sort of banking sector for quite a while. Now, let's look at stocks in general. The S&P looks like it's in scare everybody mode. It's kind of an upward sloping bearish wedge, meaning the S&P is like an athlete and it's running uphill. And as it runs uphill, the lactic acid sort of fills up into muscles and throughout the body. And, the runner starts to fail because that incline that it's running on gets steeper and steeper. All right. So on one hand, equities can go lower, and we know that. On the other hand, there are components of the equity market, like, for example, the ARK ETF, ARKK, which have already been destroyed. So since it's early in the day, we don't actually know what stocks are going to do. As crypto people, we know what stocks should do, right? Crypto's down 40, 50, 80%, and equities, at least measured by S&P, have not moved. So if there's a big drop in S&P, I don't think anybody in crypto would be shocked, but that's obviously going to have a huge impact on price and your portfolio. So what are we going to do today? Well, we're going to go through 12 charts, this being number one, right? As I've described, equities can go lower. And then we'll go through each chart, giving you color and details, right? So grab a pen and paper and focus in on what are the key levels that you need to watch today. The first question we need to ask is, are we in a bear market, right? Is it all over for crypto? That's really the question. Now, obviously, things look bad as of the recording of this stream near the opening of equities, right, on Tuesday. I'm looking at total crypto market cap on a weekly basis, right? And I've noticed something interesting. Got to actually give credit to another technical analyst out there. I saw this on Twitter and I saw this online. And I think it's really interesting. Going back to the resistance from January 2021. All All right. That's where the year started. And if you look at where the year started, right, that was a little bit, that was small resistance, right? But then suddenly, if you like look in the middle of the screen, starting from Jan 2021, if you drew that out, there were 3 attempts in July to break that particular support point. Interesting, right? Then if you go out to May 2021, which is kind of like an area where, you know, I call it the high uptick before the final thrust lower, okay? I noticed that if you drew that all the way across, right, based on this one analyst's work, okay, there were 2 attempts so far to test that zone around 1.8 trillion in total crypto market cap. So if the prior pattern from that created the July low repeats itself, there should be or could be one more thrust lower in total crypto market cap. So, I mean, that could be, you know, likely a huge flush down in some of the biggest coins out there. So going back to the equities chart, it's not a surprise if there's going to be an oh my God trade in S&P, right? That total crypto market cap could get washed out, but total crypto market cap could be getting washed out to a major support point. So it looks terrible at the time of recording. It could look a lot worse later. But in this case, in crypto, bad could be good unless we're looking at a mega crash. Let me say it differently. I think it could be an interesting experiment. The key word there is experiment to try to grab crypto as it like really got hammered and see if it can hold and rally into March, right? I think the bigger down trade is actually going to be later in the year, like sell in May and go away. Now, if that turns out to be wrong and we're all just going to sell everything and it's going to crash now, well, that may be true. That could happen, but that makes for a really short live stream, right? I think that if you look at this chart, total crypto market cap, you know, is headed for major support, right? And of course, as usual, when it heads for major support, it may overshoot that. So the oh my God trade is on, and the oh my God trade may create a buying opportunity for one last rally in crypto this year. Now, let's take a look at Bitcoin. So Bitcoin failed at an important Gann point near 43K. That is obviously not good. Bitcoin really hasn't been able to do anything. And a lot of times when Bitcoin is just sort of going sideways, that's kind of a recipe for Bitcoin to just fall off. All right. Now, I don't think the down move in Bitcoin is going to be huge. I'm seeing support at both 39K and 34K or 35K. Now, 35K, it's not shown on this chart, but that is the 21-month moving average. Okay. It's also a level, if you look in the bottom left corner, it's also an area where, I don't know, I kind of call it like the give up trade in July, right? The give up trade in July started at 35K, right? It finished, you know, below around 30, but it started at 35. So 35 could actually be really important support if everybody panics all at once over a 1 or say 2-day period. Generally speaking, it feels like there were going to be big orders below 39K. So if there's a big panic trade, you're going to see smart money active down there. Because remember, as people reallocate money out of equities, some of that money is going to find its way into Bitcoin, right? Now, if Bitcoin is below 39, it could go to 35. If Bitcoin is below 35, then we have to have a whole different live stream with a whole different set of charts, right? But in Bitcoin, I'm seeing that area between 39 and 35 as really good support. Now, Ethereum is a little bit of a different story. When ETH flushes people out, it can be really, really, frankly, violent, okay? So either Ethereum is just in a range or Ethereum could be like really affected by any potential blow up in equities short term. So it would be great if like 3,200 would hold in ETH, right? This is something we haven't talked about, is that, the pain and all the blowout is already over. All right. That doesn't seem likely, and it also doesn't help me get you ready for any potential slide down. So if there is a panic trade, where is support in ETH? Well, in August, just before the market took off, there's a good level at 2580, right? I'm sorry, 2440. So 2440 in the event of a total disaster should be support. Okay, 2580, okay, was the start of the give up trade back in June. So I'm noticing, and I'm coming up with a little bit of a new style, right? I'm looking at where was the give up trade in June and where did the recent rally really take off from, right? Like, there's always a spurt off the low, right? No one catches that, right? But then where did the actual trend begin, right? Where did people say, all right, it went up and here's a dip, right? And then I can get it. That level is 2440. Taking it a different way, where did the market collapse for the last, oh my God, inflection point? That's 2580. Now, what I'm trying to describe to you is not just drawing lines on charts, but I'm drawing things on charts, right, that have sort of like an emotional charge to it, right? That's where people were like, ooh, I got to get in, or ooh, I got to get out, right? So those are going to be the big levels to watch in Ethereum. Now let's talk about Phantom, right? Blow off over the US holiday weekend. And the question is, good projects at good entry points, right? My thesis before the weekend was don't FOMO. Don't FOMO because of things like this. Every time there's a US holiday, the market crashes. In equities, they have a famous phrase, don't go long into a long weekend. Frankly, I should have subscribed that. Transferred that over to crypto. So let's take a look at Phantom. Normally, when you have a mega trend, sometimes you stop at either the 38% or the 62% retracement. So right now in Phantom, 256 is the 38%. So if Phantom is really going to hold, which it could, why? Because money could continue to flow into DeFi on Phantom. Total value locked there could continue to increase. If so, the decline in Phantom could be shallow and you could be looking at 256. Now, that said, all right, if Phantom has been a consensus long trade and everybody FOMO'd in over, say, all of last week, which is possible, right? It's possible that everybody FOMO'd in figuring Phantom was going to 4. A lot of times when you get FOMO in a very sort of consensus trade, especially since Phantom was going up as the rest of the market was sort of suffering, you could have a blowout in Phantom. So if there is a blowout in Phantom, it could return where? Well, to the start of the prior give-up trade in December. That's on the left of the chart, right? That's where everybody just threw in the towel and gave up, right? That's around $2. Also, if you look in the middle of the chart, at the start of the year, right, the initial takeoff in Phantom, okay, and sort of it even got retested again, was around $2. So if everybody panics in Phantom, I know it's a big percentage move, but you could see 256. And if you got it at 202, if there was a total crash, right, that would be an amazing level to get it at. Betting that total crypto market cap will find support and that crypto has a shot at going higher after the equities puke kind of runs its first course. All right. Now let's look at Avax. Avax is a little bit simpler. So Avax has lost its luster. Phantom has kind of taken the lead. That doesn't mean Avax is terrible, right, or Avax is done, it just may mean there could be a flush to support. Now, I'm showing 74 as a really important level, okay? Avax may flush below 74, but keep in mind, 74 was the prior high from September of 2021. So that could be really solid support in Avalanche. And again, these layer ones could be very critical investments. They could become the new FANG. In other words, Facebook, Apple, Amazon, Netflix, Microsoft, Google, right? If those stocks are going to get hit, if those stocks are just starting to go down, then a lot of these big cryptos that have, they have a very specific, kind of tech and monetary story behind them, all right, could find support in the event of a crash, at least a short-term crash. So I'm watching 74 closely. Now, let's go to NEAR, okay? NEAR has outperformed everything. A lot of people were talking about NEAR at 50. My attitude on NEAR was take some money off the table, and people were hodling it, could continue to hodl. Let's see if that's still true. So NEAR went to 20, right? Obviously everybody who was going to sell at 19, which was a big fib number, did so. Okay. So NEAR has now joined the rest of the market in you want to get a good project at a good entry point. In other words, NEAR is probably exiting this kind of priced for perfection or the perfect layer one and interoperability play, and is kind of in the boat with everybody else. So that could mean NEAR holds support at 1680, right? If NEAR is still, in the boat with everyone else, but is still strong. So 1680 is the first support point. Now, it hasn't been tested. It got close, but 1275 was a prior high from back in November. So if everybody totally panics, right, something below 13 is a level where I just got to believe, and again, not investment advice, where NEAR would find support. So NEAR's either going to find support at 1680, or if there's an oh my God trade, it could be 1275. All right, now let's go to Solana. All right, Solana is probably one of the bigger pain trades out there. So there's a head and shoulders top that has been confirmed. Okay, the downside target of that pattern is between 100 and 109, and Solana has been slowly going down, coming back up, going down, coming back up, lower lows, right, and lower highs. In other words, a downtrend, right? So Solana has good support at 132. Solana has been underperforming, so if the market is quiet, Solana might hold, okay? If it doesn't hold and there's an oh my God trade, well, it seems logical that there'd be a lot of support between 100 and 109, right? If everybody panics. So at 100 and 109, that zone, that head and shoulders top formation, that bearish influence on price would have run its course. So if you're looking for a good project at a good entry point, and you suspect there could be one more rally into March because total crypto market cap is on support, then you want to look at Solana at 100 or 109. Now, if you've been trapped in Solana, right? So if you bought Solana at 200 and you're trying to figure out what to do, this is how I would do it. You either need to reduce risk now, not investment advice, with hopes of buying it back either lower or after it stabilizes, or frankly, if it stabilizes. So if you can tolerate 109, 100, or a flash wick below that, you stay with the trade. If you can't tolerate that, right? All right, then you need to adjust your position. Now let's talk about Polkadot. This is definitely the biggest pain trade right now in crypto. All right, definitely. So the interoperability play, you would think, was going to be a good narrative. And they have done nothing but sell Polkadot since November, right? And Polkadot has not been able to hold any material support point on the way down. It just stops, it goes sideways, and then people hit it again. So I'm trying to figure out where is support in Polkadot, right? Because nothing that I've drawn to date has honestly held, right? We keep it real on this show. Now, if Polkadot goes down, most likely it'll go down from kind of where the give up trade accelerated and the up move turned up. So in July, there was a huge liquidity event, right, in Polkadot. What does that mean? Well, that's when Polkadot went from like 20 to 12, right? Everybody turned around and gave up, and then bulls piled back in. So, nobody was able to sell on the way down. Nobody was able to buy on that first leg on the way up. And that first dip where people were able to say, oh, okay, now I can get long Polkadot, right? Because we're done with, the V bottom. That level is 20. And that also happens to be a big Gann point. So when you look at Polkadot and say, all right, buying on support hasn't worked. If I'm long and I want to hodl, and you can hodl, 20 has to hold, right? So if there's this huge, oh my God, trade, right? I mean, imagine that. Like I can draw these things on charts, but Polkadot going from 25 to 20 is a rather robust down move, rather robust, right? It's probably S&P down 3 or 5% and the rest of the crypto market down 20%. So it's a big deal, in terms of price action. It's a big deal on how you would feel. Like when I draw on charts, the reason we're doing 12 charts this morning is because I know that there are people out there long these coins. There may be some people looking to buy, but realistically, I know that the people I'm talking to own the coins. And I'm trying to give you some help in terms of figuring out, okay, where should this stop, right? And if it doesn't stop there, do I need to do an emergency risk reduction? Now, all that said, as with Solana, if Polkadot is at 25 and you absolutely cannot tolerate 20, then you need to make an adjustment, not investment advice. The best investment strategy is the one that helps you either sleep at night or get through your day without compulsively checking your phone for crypto prices, right? 20 is support in Polkadot. Now let's go to Luna. Luna is a very, very interesting, potentially very disruptive, possibly revolutionary DeFi play. That said, like Near, like Avax, there were like Luna was in a mode where it went straight from 54 to 100, and the despair over people missing that trade was very high. Now, Luna is doing a very choppy, somewhat brutal consolidation, right? When it took off around 65, I was like, okay, this could go back to its high. And then, of course, it rallies and then turns around and unwinds all that. So people who are trying to buy the dip got hurt. And it's not a bull market unless you can buy a dip and make money. So this trade, this chart, this coin was particularly brutal for people trying to get in on the dip. Now, Mehdi has brought this up a long time ago, so I got to give him a lot of love for this. Mehdi a long time ago said, this is a really great project, but it's probably a buy in the 50s. Interesting, because when I did my chart work, I noticed there's support at 75 in Luna. So since Luna has already kind of been brutal, 75 may hold, if equities don't fall apart. But if there is a sort of oh my God, calamity trade, right, where everything just gets killed, lo and behold, the 50% retracement of the whole up move in Luna, right, along with a prior high comes in where? At 54. So if we're thinking about good projects at good entry points, and today turns into a debacle, 54 in Luna is an entry point. Now, that's easy for me to say, right? But can you imagine what the market looks like if Luna goes from, say, 75 to 54? Now, I know that's kind of a stretch. That's a really big down move, all right? But if that happens, particularly if you get these like panic wicks, it's something to keep in mind. This bigger picture, right? This is either a major opportunity in crypto, right? Crypto's already down 50%. Crypto is already down, right? It's already lost half or more of its value. So if crypto really is the future of technology, then there should be a bid if there's a mini crash. Now, if there's no bid, again, that makes for a really short stream, and we're going into bear market risk management mode. Finally, Cosmos. Now, this has been almost the trade of the year for both Token Metrics, Medi, and our group, right? In other words, Cosmos, we talked about it around 20 to 25. All right. Medi did a deep dive. We interviewed the founder. It took off. It went to 40. It has not paid to be long or to be bullish on Cosmos above 40. And it looks like Mr. Market is once again confirming that. So if we go back to this whole idea of good projects at good entry points, Cosmos could hold to 35. That's one possibility. Or if there's a blowout, you could get Cosmos at 30. That's the 62% retracement of the overall up move from 2022. Now, yes, that's drastic. Yes, that might not happen. But if you're watching this stream today, or you're watching this stream out 3 days, I mean, I'd love it if you're watching this stream out 4 days and crypto is much higher. I would never be so happy as to be not relevant, or at least in need of a fresh update. But in the event that crypto sort of blows up, right, 30 is a really interesting support point in Cosmos. Okay, folks, that is your market update for today. All right, let's take a look and see who's on the stream and where they're from. So we have Cyprus, Amsterdam, okay? We have Colorado. We have Porville, Italy, right? We have Australia, Greece. Welcome. Okay, the Netherlands, Tokyo. Good evening, Tokyo. Portugal, as always. Sweden, okay? And somebody's asking for a meetup in New Jersey. I would love that. I'm from there post-COVID. That would be ideal. Medi, are you still out there?
Yes, sir.
All right.
Good morning.
Good morning. All right. So to broaden out our special morning live stream, we're going to let Medi take over, and we're going to have, we're going to have a presentation and a discussion about DeFi and anything else that Medi sees in the market. Just as a reminder for anybody who may be new to the morning stream, Medi is what I would call one of our fundamental experts. He's got a great background in investing, okay, and in blockchain science. So he's one of the truly unique characters in crypto. So listen up. Medi, with that, over to you, my friend.
Yeah, so I had a couple of topics I wanted to discuss, but before I jump into it, I saw some of your TA, and I just wanted to give some of my thoughts regarding the fundamental backdrop of some of the projects I have done deep dive on. Uh, so Cosmos, even for long run, I'm very constructive, and the reason I say that is that they have implemented this thing where different projects for marketing purposes can give you airdrops, and those airdrops are not any dabs. These airdrops are other layer 1 tokens. So let's say, for example, if there's a next secret network being built on Cosmos, for marketing purposes you'll get those airdrops. So for me, I feel like accumulating Cosmos in a bear market would be a wonderful strategy. primarily because you get these wonderful airdrops of different projects for marketing purpose, and then basically you can not only stake your Cosmos, but then stake those airdrops and basically get yield from two different ways. Polkadot, like I love the architecture. I love the guy who created it, both the founders as well. But now the main concern for market is that market thinks it's very expensive for developer to develop on Polkadot. So Bill, let's say if you want to launch a new project on Polkadot, uh, you'll need to pay them. You'll need to pay them in order to build your own blockchain. So they hold you ransom for a couple of years, and they are like, okay, give us Polkadot, bond the Polkadot with us, and we'll lease your space in our blockchain to kind of build project. So a lot of developers I'm speaking with, some of them really love it. They're heavily embedded in the ecosystem, and some of the developer just thinks that it's a bit of a nuisance. It's expensive, and so you have this kind of like narratives in the market where sometimes Polkadot just dumps, becomes very painful, and sometimes you kind of see a crazy rally to, let's say, $50, $55. Now, one of the guys said that Polkadot and Cardano are selling dreams. They hold no value. I would say with Polkadot, I think there is something more than a dream. You although have one of the best founders out there, you have parity technology, you have Web 3.0, but you also have amazing projects building on top of Polkadot. Like we covered RMRK. There is Moonbeam that is being built on Polkadot. There's Kilt, there's Kava. So there are good projects. BitCountry, for example, they are basically like Roblox of crypto. So I wouldn't say it's just dreams. Cardano, I would be like maybe inclined to be in agreement with you. I haven't seen much execution, but I haven't studied Cardano, so I can't give you any viewpoints. So, Bill, those were some of my thoughts regarding some of the TA you have done. Just wanted to give it a bit of a fundamental backdrop. Um, and also, what we are seeing in the market, guys, at the moment is that you saw that OHM dumped, right? And you also saw time dump. So now I'm wondering what's the next trend in DeFi? And these are like some of the questions that basically are keeping me up at night, because I feel like DeFi is the next leg of fintech. L- DeFi is where banking sector will get disrupted, insurance will get disrupted, and a lot of sectors related to financial service will get disrupted. So, what is the next strand that you guys have to look out for, and maybe potentially be early? And I have a presentation for you guys, a very brief one. Me and Bill can discuss it, so we can like decode it one by one and kind of give you. Backdrop of what we think could be the next OHM without the Ponzi element of it. So hopefully you guys enjoy this, and we can even try to answer some of the questions you might have. So just bear with me. I'm just setting up my slides. 1 second. And if you do bear with us, at the end of the presentation, I am also going to tell you what I think could be the next Terra Luna, and what could be the next Board Ape Yacht Club NFT kind of a project. So definitely going to do some alpha drops, not financial advice, and potentially make you a lot of money. Again, not financial advice. So if you have used Robinhood, right? You would have loved using Robinhood as a trading app. So my previous work experience in my previous life, I was equity analyst, and I went on their quarterly reports, and I was like, how is Robinhood making money? So Robinhood is making money from crypto, fair, but a lot of the revenue is coming from options. So this is options and derivatives are speculators' dream. So how about this? If there is the next trend in DeFi, which takes DeFi from 0 to 1, could it be options? Could it be derivatives? And so this is one of the themes that I personally like. And I think me and Jad, we're going to do a very interesting deep dive for you guys later on, maybe next couple of weeks, and kind of show you some of the projects we like a lot. So you can kind of see that option for retail, and a lot of users of Robinhood app has been amazing. And now in crypto, in the DeFi ecosystem, structured products are what I call options, and like options of crypto. So October you had 250 million, and now in December you have a more than like 2x kind of a jump. So definitely kind of seeing that in DeFi ecosystem across the board, across Ethereum, Solana, Avalanche, Phantom, options, structured products are taking place. They are going to be the future. Uh, Somebody said crypto holders are gamblers, so I think it will be derivatives. Yeah, partially agree with you. I think DeFi can be a bit of a casino, and one way to smartly play the casino is to basically get exposure via derivatives. But obviously, with good protocols, with good tokenomics, I think you can benefit from the casino held in the DeFi sector. Now, if you kind of see, like, these are some of the names I'm going to mention. So do your own research and see which one of these names you like. We have covered Ribbon Finance before in depth. If you were a Token Metrics customer, Jack did a deep dive. Mike and Forrest did a hidden gem report on it as well. But at the moment, Ribbon Finance has been dominating the derivative sector in terms of TVL, guys. But there are a lot many projects building up. So you have Friction, you have Theta Nuts, Katana, Premia, Dopex, and a lot of these products are derivative based, option based. So if you couldn't see it again, I'm gonna show it down or show it over here. So I want you guys to note these names down. We'll do a deep dive on it, but this is also educational channel, so we want you to basically go do your own research, have questions for us when we do launch our deep dive on this, and ask us. So these are some of the structured product I want you to go and explore. Maybe you also find some of the projects that I've not mentioned here, but these could be interesting projects that can basically become really massive going forward. So I want you to study them, look at the team, look at the investor, look at the tokenomics, and make up your mind. Maybe this could be the future. And Masari also did a report on this. So I have like a small snippet for you guys as well. Let me quickly share my screen again. One second. Yeah, so Masari did this option protocol ecosystem map. So shout out to Masari. They did a good job. Credit where credit is due. So they basically distributed the option protocol ecosystem into different elements, guys. So the one element I was speaking about was structured product, but then you also have like exchanges, marketplaces, and different type of pooling in order to kind of facilitate derivatives. So guys, we are so early. What this chart is showing you, this all of this is showing you, is that there's a lot of work being done on the infrastructure side. So exchanges will be built, marketplaces would be built, and then on top of that you'll have a consumer facing structured product. Let's say the next Robinhood, for example. So we are so early that if you're able to identify at good valuation some of these gems, especially in a bear market, I think a lot of money can be made, and this money can be made for the next 3 to 5 years. So we are quite early on this. One of the trends I think you should definitely explore more. Uh, so yeah, Bill, if you have any questions for me, or if our customers have any questions for you, I'm more than happy to take them.
All right, I have a question to start with. Tell me if you can about Kava. For example, I remember Kava as just kind of a leveraged lending play. Did they become a layer one? Are they connected to the Cosmos ecosystem? I know I'm sort of putting you on the spot there, but tell me what you know about Kava, if anything.
It's a layer one, and I know one of my favorite investors, Hyperspare. They're investing in it. I haven't done a deep dive on it, but I know it's a cross chain DeFi platform, and it has multiple application, especially focused on lending and cross chain bridges. So it's basically, as far as I remember, it's like their thesis is that we're going to be in a multi-chain world. So inside Polkadot, you'll have different chains inside Polkadot, different layer ones, because it's a layer zero. So you'll have different layer ones inside Polkadot. And then you'll also have outside Polkadot amazing ecosystem building such as Avax and Ethereum. So let's just have a DeFi which basically connects all the chains inside as well as outside, and have bridges, and basically basically make DeFi more crazy and crypto more crazy.
All right. Thank you for that. One of the things I also wanted to ask is about, ohm and time, right? Is there a situation where if the collateral that these protocols hold, because as I understand it, right, you give them Avax and ETH, and they issue you, the ohm or the time token. So first of all, is that correct? That's how that works?
Yeah, sort of. So what they do is they're trying to make a monopoly of the liquidity. So Ohm at the moment is not listed on any exchange. So what they do is they said, like, you know what, give us your LP tokens. Like, let's say give us like two different assets, or give us one asset, and we'll give you 2-3% discount on Ohm. And and basically because of that, and they also charge you transaction fees. So because of that, they're able to build up their treasury, and they
Okay.
also earn interest on their treasury, and basically control the liquidity. So initially people had thoughts that, you know what, OHM just cannot have a sell off, but that was wrong. Their aim was to become a reserve currency. So US dollar, the aim of the reserve currency is not to appreciate over time. The aim of the reserve currency is to be stable. So initially there is a lot of volatility. It went to 500, went to 600. Now it's collapsing back to 100, 120, and so on and so forth. I think eventually it will become very close to a treasury. So let's say if treasury is 2 billion or 1 billion, whatever the treasury amount is, it's going to trade around like 5 to 10% bracket around that, unless they deploy their treasury in certain ways that can benefit them. So what happened at the moment was, in their treasury they had Ethereum, they had different other assets. When the market collapsed, their treasury also went down. When their treasury went down, people basically panicked, started selling rather than giving them liquidity. They started selling. And I have an interesting tweet to educate some of the uh, customers we have over here. One second, let me just pull it out. So I basically highlighted this few days ago. So this is it. So this was from their white paper. Sorry to be a bit dramatic over here, but I kind of knew this few days ago. Like this kind of event will happen. You're seeing across all OHM kind of plays. So Time Wonderland, even Rome DAO in on Kusama is kind of facing the same issue. So this chart basically shows you, if everybody is taking their own, you have a very good scenario. You get yield, and the coin pumps and you benefits. If somebody stakes and somebody bonds their ohm, you have this scenario where, it's still a decent outcome. But the horrible outcome is when you are selling and everybody else is selling, you get this -3 outcome. And this is what we are facing at the moment, because all the treasury, the assets are depreciating, the treasury is squeezing up. It was trading at like 3-4x premium, and now that premium is evaporating away. So, like, those are some of my thinking when it comes to basically.
All right. Well, thank you for educating us on that. So I think if I could, sort of encapsulate it, a lot of people sort of FOMO'd in. They gave their ETH and their AVAX or whatever, the bigger coins, to these protocols. They issued them either like ohm or time, right? Now, when everyone started to unstake, or when like the time or ohm, coins started to crash, you had a combination of the collateral inside the protocol going down and everybody kind of panic selling the monopoly money. So it kind of accelerated. Do I have that right?
Yep, spot on. Like, absolutely
All
dead
right.
on right. I couldn't articulate it as well as you do, Bill. So this was exactly the issue. It's like Zimbabwe hyperinflationary money, right? So this token was hyperinflationary. They are just giving you a high inflation just to stake coins. Don't get me wrong. The vision was interesting. Like protocol. So the key takeaway, the educational element that the whole crypto and DeFi sector learned was, you know what, protocol can own the liquidity and can basically intervene in the market and stabilize price. I think this is very important. I think this is a takeaway. But sadly, for a lot of investors who basically aped in without studying, or didn't know the risk. So I know Ian liked it, but he knew the risk that this is kind of like a Ponzi scheme, and and it doesn't matter even if it's a Ponzi scheme, you can still profit as long as you're early. And sadly, those people who went on Twitter, saw Daniela and all of the people hyping up Frog Nation and OHM, they basically FOMO'd in. They didn't study, and it's like everybody herded in, and they kind of forgot that whatever goes up can also go down. But in case of Ohm and time, it goes up fast and comes down fast, and they forgot that and FOMO'd in, and sadly, we're kind of seeing blood in the street now.
Got it. So as I know we don't want to be too bearish, but if there is kind of a flash crash or even a bigger bear market in crypto, I mean, is there any chance there could actually be more downside in these Ohm or time tokens? I mean,
Not time, not time as much, but I think Ohm could definitely see that because their treasury is still trading 2-3x premium, whilst time treasury is I think very close to its market cap, the actual
got
market cap
it.
out there.
All right. So it is safe to say that if you're going to get involved in this, you've really got to know, you've got to do the math as to what the treasury is worth and see whether or not the token is kind of going back to equity speak at fair value. Is it trading at a premium to what they call NAV or the value of the assets, or at a discount, right? Is that a good way to talk about it?
Yes, yes, I can show people like. See, I'm not a specialist on this matter, but I think Coin Market Cap has the TVL of all of these coins. So maybe I'll just quickly pop this out and
Yeah,
show
sure. Pull
people
that up because I
what.
know there's a lot of people asking about these coins, and this is kind of the prep for the worst live stream. So, feel free to pull that up and, give us whatever knowledge you can.
Yep. 1 second. I'm just trying to figure out if they have a TVL over here. So apparently in Coin Market Cap, you don't have a TVL. So let me go to CoinGecko.
All right. So one person commenting here says, all my funds are invested in time, but I'm still up because of the APY, right?
Yes.
I'm at the same amount I started, but when the price goes back up, I'll do better. So this is the flip side. What happens if these coins get to sort of fair value and they bounced? Because one guy is asking, will they ever recover? So maybe if Mehdi can pull this up, we can take a look.
I think the scenario will be very saddening, guys. So Olympus is at the moment $110, and TVL over here you can kind of think of it as its treasury. The fully diluted valuation at the moment, or even the current market cap, is around 1 billion. So it's still trading 3-4x times its treasury value. So yeah, I think it's going to be painful. So what's going to happen is that as the price drops, Ohm APY will increase to kind of facilitate the stakers. But since there is such a big discrepancy in the TVL market cap, people rather than staking will perhaps take profit. So unlike a lot of investment, this is a zero sum game. It's not like growing the pie, it's a zero sum game. Whoever got in early, let's say when Ohm was $30-$40 and the APY were in millions, they basically are dumping the bags on you. So if you get on Olympus now, like personally, I don't think it's a good strategy. And why get the headache, guys? I just gave you some amazing alpha that with your own research uh, you can earn a lot of money with derivatives next 3-4 years. Time, I think over here, I think it's slightly different. I think TVL is higher than this, but the gap isn't that much. I think the OHM, the gap is 4x. Over here, the gap is like the difference of 40-50%. And I think a lot of this gap, I'll still be willing to pay that premium because Daniela is going to use that money to buy VC deals. And we know that VC deals, they have access to good deal flow. And those VC deals in a bull market can 20x, 30x. and retailers do not have access to that. So me and you, like normal people like us, we don't have access to that. Only rich people, powerful people, builders have access to that. So you can take advantage of that. I don't know if OHM is doing that. I'm not aware. So this is a metric you have to see. CoinGecko might not be accurate, but go on their website, go on Time's website, see their treasury value, see the TVL, and see the market cap currently. If market cap is 1.2 billion and TVL is 400,000, uh, basically you are paying premium to own it. So we like to be value investors rather than hype investors or what other people are doing. Other than this, see, 11,000 coins. Let's just if you took the hit, you're down 20-30%. If you don't have conviction because you bought it since one of your friend told you to buy it or somebody from Twitter was shilling it, if that's the reason why you got in and you don't understand the rationale, take 20% loss. I assure you, not financial advice, you'll see a lot of hidden gems and other amazing crypto projects that will more than compensate for you. So yeah, just move on.
All right, good advice. Good advice for risk management. Remember, folks, the best investment strategy is the one that helps you sleep at night. Now, for my next topic, I wanted to talk about the big layer one coins because a lot of them are off their highs. So one of the question I have is, so we're talking Avax, ETH, Solana, Phantom, and even some of the up and coming ones, like Harmony, and I believe the symbol's Rose. Now, one of the questions that I have is for you is, what is the case for layer ones going forward? For example, is it a flood of money coming into DeFi? If the total value locked in DeFi doubled, even with the market stable or going down, would that benefit the layer ones? And if so, how would it?
Yeah, amazing question, Bill. So just with DeFi, even with layer ones, TVL is the most important metric that everybody needs to uh, look at. So with TVL, look into just two things. Look at how much TVL there is locked, and what percentage the TVL is growing, let's say week on week basis. So if the TVL is growing at a very fast pace, that's amazing. TVL is high, that's amazing. But then if you are very diligent and if you want to make a lot of money, you go in and see if the TVL is sustainable, or is the TVL because, let's say let's say in case of Time and OHM, the DeFi projects had 30,000 APY, and that's why a lot of money was pulled in. So you want to see that TVL is basically sustainable and it's diversified across DeFi, NFT, gaming, metaverse. Sustainable TVL, high TVL, and momentum in TVL benefits layer one, and I'm going to explain why it benefits layer ones. So think of it like this flywheel effect. When you have high TVL, lot more people basically come to your platform to do transaction. When a lot of people come and do transaction on your platform, you generate a lot more fees. When you generate a lot more fees, a lot of those fees gets burned out, or basically when it gets burned out as gas fees, the layer one token supply decreases and the demand is still out there because of TVL locked, and hence the price increases. So you have this amazing flywheel reflexivity uh, as the TVL grows over time.
All right, interesting. So one other question I had was that, for DeFi, right? Is there any case to be made that in the legacy world, instead of having to try to buy bonds with like a 1% yield or a negative yield, is there a case for legacy to flood into DeFi to try to get a yield that's either equivalent to or better than inflation, right? That's the first question. And if so, are there any beneficiaries to that process other than the layer ones? For example, is there a case for Sushi or Aave? I know we talked about it beforehand and you gave me kind of an answer, right? Well, you gave me an answer, but I'm just interested for the audience. If money flowed into DeFi looking for what's called a positive real yield, as in return minus inflation, like what are the beneficiaries in DeFi other than layer ones, if any?
Stablecoins.
Okay.
So stablecoins like Luna UST will kind of will benefit. I'm not saying go buy Luna now. It's, I think, still higher price, but the way it benefits Luna, for example, let's say a lot of people lock up their funds in Anchor, where you can earn 20% interest. By the way, guys, if you haven't checked it out, so you take stablecoins. These stablecoins in case of Luna is algorithmic. You buy the stable coin, put it in Anchor, you get yield. TVL increases, more activity is generated on Luna, more stakers come in and secures the network, and you have this network effect. So Luna and Terra basically are beneficiaries. Now, in case of Aave and in case of Trader Joe, now this is a tricky one. To a certain degree, DeFi at the moment is very casino-like. So let's say when you're putting money in a US, like let's say you're lending money in a US stable, you're going to earn 5-6% interest. That's fine. That's amazing. But sometimes that interest is also paid in, let's say, coin of sushi or coin of Aave, for example, or coin of Trader Joe, because these coins are inflationary. So what investors do is, okay, I get 4-5% from the stable coins and 2-3% inflation because of these coins, and my job was to stabilize my portfolio rather than speculate on sushi and Aave. I'll basically take those coins and sell it in the market. So even though you can earn 6%, 5%, 4% interest rate on your stable coins, but that doesn't necessarily mean sushi, Aave, Trader Joe could benefit, because these investors are there for safety rather than speculation, especially in a bear market.
Interesting. All right. So, if there is a future in DeFi, is there a cross-chain DeFi revolution coming, or is that only theoretical? Because one of the things that I've read, Rune, Rari, and things like that, is cross-chain DeFi real, conceptual? Any thoughts on that?
Absolutely. I think maybe the future is in cross chain in 10 years' time. Maybe it's the world will look like, okay, Android and Apple or iOS and in mobile phones, or Windows and Mac OS in computer. Like you'll have just two chains or three chains or four chains dominating the world. But next couple of years, when I speak to investors, when I speak to other VCs and developers, I think we are moving towards a multi-chain world. Definitely next 3-4 years we are moving towards multi-chain world, and DeFi at the moment is lacking that element, and there are only few projects that are really working on it. And one of them is Torchain, Rune. They had a previous hack because what they were trying to do was mind-blowing, and hence they kind of failed on the execution part. But if they make a comeback, I think that's one of the projects to look out for. So definitely in agreement on that. And instead of one another way you can play the multi-chain DeFi world is betting on algorithmic stablecoins, and and you guys are in luck. So apart from Terra Luna, uh, there is another coin which can become the next Luna, next Terra, and this coin hasn't launched yet. So we are very very early. In the private rounds, they did 50-60 million valuation. So this could potentially be a 100x 10x coin. So the reason why I'm bullish on decentralized algorithmic coins is, firstly, whichever ecosystem you are in, you'll need the stable coin, because I said you have bull markets and you have bear markets. In bull markets, you basically buy stable coins, and you can buy stable coins and use it to buy other assets. So there is a demand. And even in bear market, you want to buy stable coins because you want to park away your money. So there is always going to be a demand for stable coins. Now imagine this stable coin is not linked to US dollar, but it's linked to an economy of its own. That's why it's called algorithmic stablecoin. And when it's linked with the economy of its own, the other coin, so there are always going to be two coins. The other coin gets burned, so you basically accrue a lot of value from the other coin. So in case of Terra Luna, you have UST as a stable coin and Luna as a burning coin. So whenever UST demand increases, Luna gets burned. So that's an amazing thing, and I think uh, I think decentralized stable coins is the way forward, and I'm very bullish on this vertical. And Bill, I'll tell you why. Firstly, we don't know which chain is going to win, but we know that there is going to be application of stablecoin. Secondly, we just saw what USDT did. USDT, basically because of some kind of a fraud, froze 160 million in accounts. And plus, if US regulators or policymakers want to target crypto, they can literally just attack the banking layer, and we'll basically be orphans without stable coins. So in DeFi, we need a decentralized algorithmic stablecoin which is native to our ecosystem. So whether it's decentralized exchange, lending, borrowing, synthetic assets, we need decentralized stablecoin. And this is why I'm very bullish on Luna. And there's another coin I'm going to share my screen, give you some thoughts on that. One of the projects to look out for. One second.
Yeah, so that's really interesting while you pull that up, that, this whole idea of Luna and the decentralized stablecoin, allows for huge growth. And, also as a reminder, you have to also be careful because in some ways, certain stablecoins might be risk assets. They might have regulatory risk. So let me turn it back over to you.
Yeah, so we have this project launching on Secret Network, and Network is on Cosmos, and 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 I said earlier, if you're staking your Atom, you can get free airdrops. So unfortunately, not now, but let's say if you were staking your Atom 1 or 2 months ago, you will have gotten free airdrops of this coin called Shade. Now, Shade is the next Terra Luna, in my opinion. So you have these two coins. You have a Silk token and you have a Shade token. So in Luna, you have a UST and you have Luna, and they're kind of building up the same system. But another interesting thing is this coin is basically private. So don't not only you get like decentralization, but you also get privacy. And we love Secret Network. We have done 100x show on it. It's amazing. And Bill, if later on, if you can see the charts, it has been making moves lately. So you get the privacy element, you get the algorithmic element, and you get like a next Terra Luna potentially. I'm not saying this will 100% be. The project is not even out there. We don't even have a token, but it could potentially be there. I saw founders video and I was like, wow, they know how to make a token economics. So guys, still this is an educational channel, so I want you guys to work hard, go and research about this coin. We are definitely going to do a deep dive on it later on. We might even include get the founder to kind of explain it to you why this could be bigger than Luna. And at the moment, the private round is around 60 million. So we are very early on this if market doesn't know. Again, this is built on Secret Network. Secret Network is built on Cosmos. So this is the UST version, and this is the Luna version. And basically there's a burning mechanism, and this has a fixed supply, so over the period of time it can do. So this is one of the alpha drops I've done for you guys.
All right, Mehdi, we appreciate that. Thank you. And again, at Token Metrics, we're not only trying to give you, technical analysis, market guidance. That's our YouTube channel. So please subscribe. And if you like the content, hit the like button, right? Also at Token Metrics, one of the things that you're getting from listening to Mehdi is that we have human analysts, right? Particularly ones that can help you find projects early or understand products that are out there. Now, switching gears, let's try and go back, all right, and take a look at some of the things that our AI was looking at headed into today. So, the market was down, and our earlier presentation was like, okay, well, what happens if the market falls apart? Now, going back to the slide deck, let's see what our AI was looking at, right? Just in case the market doesn't fall apart. So on Coinbase Pro, the daily index was looking at Cardano, right? Remember all this talk? At Cardano at 3, it was going to 50. Cardano at 1.2, I talked about value investing, and it actually managed to rally. So our index, all right, our AI has picked up on that. So if the market doesn't fall apart, Cosmos, Rari, and Cardano. And even if it does fall apart, I'm interested to see for Token Metrics subscribers whether or not these coins stay in the index if there's volatility. Now, interesting in Crypto.com's daily index, because, oh, by the way, we have expanded the number of exchanges that we have daily, weekly, monthly indices for. So interesting that Cardano, near any swap, right? Kind of like cross-chain trading, something I was talking about last week, along with Cosmos, is in that daily index. If the market gets volatile down, okay, or if we sit still, very interesting to see how these coins perform. In other words, I gave you kind of a list of levels on the big coins, and then this could be, assuming we're not headed for a massive risk asset class crash, this could be your watch list. Okay, Crypto.com weekly, Harmony, Chainlink. Okay, Mehdi told you we discussed Kava. Okay, that's actually been in the index for a while. And last I looked, Kava was actually up with the market down. Near protocol in there. Kraken, again, Cosmos, Cardano, and Kava. Interestingly, about the Kraken index, the daily one, it worked fantastic on the way up. And note, it had a 20% allocation to Pax Gold or something more, conservative for some time. So sometimes our indices can give you a hint that, there may be volatility or a flush coming in the market. Again, Kraken Weekly, Chainlink, Kava, and Cosmos. Okay, now just looking at the Kava chart, because I keep bringing it up and bringing it up. Now, if there's no crash, or if there is a crash or a dislocation, and Kava holds, what could Kava do on a rally? Well, I'm showing $5 as kind of a critical level, maybe around 486, right? And Kava's got that sort of upward push. So if Kava is the next near, and I know it's not as good as near, but if Kava is the next coin to rally as everything goes down, the old high in Kava was 8. So, not investment advice and not necessarily a prediction, but one of the things I wanted to drive home with this particular deck is that we're still in a market of cryptos, right? Unless the whole thing's going to crash, there are ways to find coins that will do better or that you can buy on a dip, right? Assuming a sideways market. All right. So what I want to do is I want to say goodbye. I want to thank everybody for getting up relatively early US time. We wanted to give you some guidance as the market declined. I definitely wanted to thank my co-host Mehdi for all the science and the investing knowledge that he can bring to the table. Okay. So, I want to wish everyone well. Stay with Token Metrics. We will stay with you as the market moves wherever it moves. So that's it for today, folks. This is Bill Noble signing off. I will see you tomorrow.